Equity researcher William O'Neill joins us on the show. Well, hi Mayuresh. Good afternoon. Good to see you in. What's your view on ABFRL? A big underperformer, didn't do the right moves. Now they're announced segregating of the businesses. Looks like they want to unlock some value. Your take?
Afternoon, Nigel. So I think the numbers have been sequentially and on a year-on-year basis quite good. So if you probably look at the standalone numbers, if I'm not mistaken, they've done EBITDA margins close to 14.5%. And even on a consolidated basis, they've come close to 11%. Obviously, if you look at the segmental classification, their lifestyle brands are expected to continue doing well. So they've seen a very good recovery on a year-on-year basis. And when you're probably looking at the entire perspective in terms of the ethnic business, how the demerger is expected to play out as well with ABFRL, the expectations of more stores coming in. I think a large part of how the distribution network is, how their key bands will work, specifically in terms of lifestyle, the youth western wear, sportswear, they're also getting into innerwear. So I think there is expectations of good volume growth coming through on the branded part of the business. And therefore, as discretionary spends keep on going higher, specifically for urban as well as semi-urban areas, I think this should be a key beneficiary as far as numbers are concerned. Obviously, the chart that you're now putting out, Trent has been a huge outperformer. But at some point, I think with the numbers that ABFRL has posted, there is some recovery that is expected. So anybody holding onto the stock should continue holding. There should be good, solid recovery from the second half for ABFRL and a consistent one at that.
Okay, got it. Mayuresh, hi, good afternoon. I was highlighting this earlier as well. The selling on life insurance stocks, a lot of the private insurers, HDFC, SBI, ICICI Pru, they've all been down quite a bit today. Would you read anything into it, hearing anything about it? And what's your take on the sector?
No, not too sure. I think whether there are any regulations that have been proposed by the regulator, and that's why the stocks are down. But generally, if you probably look at Surabhi, the entire construct of these players, since the tax tweaks that happened last year in the budget, many players, including HDFC Life, ICICI Pru, even LIC to a certain extent, had to go through a change in their product mix. And with the change in the product mix, obviously the entire expense part that gets front-loaded, both in terms of commissions to be paid out and the operating expenses as well. They were on the higher side for both these players. They start moving higher. And the value of new business margin starts coming down. So to that extent, I think till the appropriate mix is achieved, which might take a few quarters more, I think the numbers might still be a little bit on the softer side. I think SBI Life is something that still stands out in our opinion. Obviously, price action has been very, very muted for all the players. We'll still need to see good price action, specifically on the EPS and RS ratings that we see at Markets with India. But as far as the product mix is concerned, I think it's got a very, very stable product mix. When it probably comes to the VNB margins as well, that should be maintained because the product mix is very, very appropriate compared to the three players. They've got a huge bank assurance tie-up through SBI, which gives them a huge network and distribution reach. And the overall operating costs are very, very minimal. And they've done an added provisioning as well a few quarters back, which also gives them the cushion. Therefore, I think in terms of expected embedded values, expected return on embedded values, as well as VNB margin maintenance, I think SBI Life should relatively stand out compared to the other two life insurance players.
By the way, Mazgaon Docs reported numbers a while back, about 30 minutes back. Revenue jump of 50%, margin expansion of more than 700 basis points to 17%, and the profits have doubled. Look at that stock reaction after 3 o'clock when the numbers came through. Now up close to about 11%. And Sumitomo Chemicals was a big mover yesterday. Today it started trade a bit soft, flattish, but now the stock is up. It's a double-digit gain now again on Sumitomo Chemicals. So 2 back-to-back days of big moves. Mayuresh, in this earnings season, in the last leg over the last couple of days, which stocks got your attention in terms of strong numbers where we've seen earnings upgrade and a potential to add to one's portfolio?
Afternoon, Rima. So I think from a Markets with India perspective, what we found out is domestic infra-related stocks can still continue doing well. So Welspun Corp, Jindal Saw, as an example, is where I think the potential in terms of business outlook and opportunities are still underutilized. So to that extent, I think the 16,000 kilometers to get extended to 27,000 kilometers, the huge pipeline that is expected to get put out. A lot more orders can come through from the domestic business. Nal Se Jal has an outlay of 70,000 crores, as does Saudi Arabia. I think Saudi Arabia is spending big time in terms of not just the pipelines, but also the desalination networks as well, which helps these players. So I think a few of these players like Welspun, Jindal SAW, the numbers were decent, can do well. One outlier that we probably are liking at this juncture might be Balmal Lorry. This stock, typically a government entity, but largely into logistics. They've got leadership position in terms of industrial packaging, steel drums as an example. What you will also see is the kind of capex that they're probably doing in terms of third-party logistic warehouses, which is going to be a big thing going forward. And therefore, I think the management has a clear vision in terms of achieving a revenue of around 6,000 odd crores over the next 2 to 3 years with very, very healthy margins. And even for this year, on an annualized basis, they've done an EPS of 15 odd rupees compared to 10 rupees for FY23. So I think one stock where the dividend yield is decent and earnings can be decent can also be Balmal Lorry. So construction, manufacturing are themes that we probably like and markets with it.
Okay, all right. We'll leave it there. Out of time, Mayuresh, thanks very much for joining us here on this program at least, and we'll continue our conversation a little later. Thank you for joining in.